Go live. Got it. This is now streaming live on Facebook. Okay, so we are live on Facebook. I'm just making sure that I check here to make sure it is going where it's supposed to. Yes, it is good to go. So welcome, everyone. Come on in. We are going to have a conversation today. We're going to be talking about if you've been affected by COVID, how it can reduce your taxes owed or give you back a refund. So I am here with Noura, my lovely co-host, also another tax and accounting professional, and we are going to talk to you guys about that. So to begin this introduction, I am Shane the Negotiator, and I help coaches and consultants to scale beyond 6 and 7 figures using legal tax and accounting strategies. And I'm going to pass it on to Noura.
Hey, hey everyone. Good evening. Thank you, Shane. My name is Noura ALmasri, and I'm tax and accounting professional and the founder of Noura's Books. I help business owners to pay less in taxes to increase their cash flow utilizing tax strategies. And welcome to tonight's segment. I'm so excited to be here with Shane.
Awesome. So as I mentioned, we're going to be talking about if you have been affected by COVID, it can reduce your taxes owed, or it can give you a refund. So if you are self-employed and COVID affected your business, you can potentially get a credit up to $20,000 when you file your taxes for 2021. So that's what we're going to be talking about today. So how many people have been actually affected by COVID? I know I'm pretty sure I got COVID in 2019, like right before the pandemic started. It was around November timeframe. I think I had COVID symptoms at the time. I went to the hospital, and they didn't know what was wrong with me. I got some antibiotics. They kind of, take 2 of these and call me in the morning type of situation. I went home. After about a week, I started to feel better. Then, we launched into 2020, and then we started hearing the conversations about COVID or whatnot. And I don't think I actually got severely sick a second time when I got COVID again, but I'm pretty sure I did. Most of the United States got COVID in some way, shape, or form, or we were exposed to it in some way because someone we knew might have gotten it. So in 2020, there was what's called a COVID credit, that when you file your taxes, if you were affected by COVID, if your business was affected by COVID, then it was some credits that was given out to individuals, and it has returned again for 2021. So that is what we're going to be talking about today. So I'm going to pass it on to Noura so she can go ahead and talk a little bit more about it as well. Hey, did you get COVID in 2021?
I believe I did. There's no diagnosis. I did this antibody. It was negative, but I'm pretty sure me and my husband got sick in the beginning. He was very sick, and then I got it, I think, because I was coughing and I was so sick, and it wasn't flu in anything. And I remember going to the office. I was still working for a company back then before I started my firm. And they were looking at me like, you're coughing? Like, no, I went to the doctor. He didn't say. So yeah, but yeah, I think everyone got it somehow, like in some degree. So yeah. So I'm really excited about this. This is even better than last year. Like the COVID credit this year is much better.
Yes, it's much better. So yeah, we're going to talk a little about that. So if you were self-employed individual and you were affected by COVID, it doesn't have to be you alone have been affected. So it could have been you was affected. It could have been a loved one, like a husband, a wife, one of your children. It could have been a neighbor, a family, anyone that was affected by COVID, and you had to, to take care of that person, or you was affected by it yourself and you could not do your work, which is your self-employment work. So you couldn't run your business anymore. Then you are able to take part in this in this credit. So
another point, I'm sorry. So another point also, if you have kids and their school were closed, this is another reason you might be able to get that credit. Go ahead, Shane. Sorry to interrupt you.
Yes, no, you're absolutely right. So if you have, just like Noura said, if you had your children was going to school and during COVID, the schools got shut down and, the kids couldn't go in. Or if once the school reopened and the kids were going, and then one person in the class might have come up positive or suspected, and then they have to shut it down for 2 weeks for everyone to quarantine, that applies. Because now if the kids are home and especially if you're working from home with your business, I don't know, I don't have any kids. I can't necessarily relate, but I have a dog, and I know sometimes she's annoying, bringing me all kinds of toys or whatnot. I can only imagine what it's like when the kids are home and out of school, and they might be sick or they're in quarantine. You can't really work as well as you probably can. So if that was a situation that happened to you, and you were not able to run your business like you would because you had to tend to your children, you had to start homeschooling them, or be participating in the remote learning or whatnot, that all falls into, you were affected by COVID in your work and you couldn't work the same way, so you will be eligible to claim that credit as well.
Also, some works like you're required to leave your home and go to your another site to do the work. That's also very good reason where you can get the tax credit. But you do have to have proof that you are eligible as self-employee.
Absolutely, absolutely. So yeah, so in terms of the proof, so the proof is not as complicated as you may think. So if you got an email that you were emailing the nurse at the healthcare facility or the hospital that you go to, because a lot of times now they're sending emails, and you can actually text your nurse now, or your doctors might text you. If you have that correspondence and they told you to quarantine at home, they told you your COVID results came back positive, that's documentation right there that you can hold on to, that you can use if need be. Now, when you are applying for this credit, when you file your taxes and your tax pro, hopefully one of us is doing your taxes for you, and you apply, you get these credits, you don't have to show proof with the return. Of course, you'll show it, you may tell your tax pro about it, you hold on to it. You don't submit it when you're submitting your tax return because the IRS don't want it at that time. You're holding on to it so that in the event 2 years from now or up to 3 years from now, they decide to say, hey, this person looks like a nice person to audit. Let's see what's going on over there. And they reach out to you and say, and give you that nice little letter and saying, hey, come up for an examination, the fancy words they're using, which is audit. Then you can provide that documentation if they ask for it and say, hey, we need to see their word substantiation for that credit. Then you can go ahead and show them those text messages that you have tucked away. You can show them the email. You might have gotten a letter. You might have went to a rapid center where they did like a rapid COVID test or whatnot, and they give you the paper for that. You can use that as well. If the schools were closed, it's going to be you'd be able to get the information from the school that says it was closed between this date and that date, and that's going to be sufficient enough evidence. It's lots of documentation that you can possibly get. And you think of some others?
Actually, it happened to me when COVID started. After a while, I got really sick and I didn't know what was going on. That was another time. And I thought it was COVID. I was certain it was COVID. And then they were not taking people into their clinic. So I had to schedule online, just like now we're talking, an online meeting with the doctor, and she was able to meet with me. That can be a proof that you had to see a doctor. So this is one of them.
Absolutely.
You can have, yeah.
Absolutely. So the nice little part about that as well, so you're married. So a lot of times, you're married and you might do married filing jointly. And the nice part about that is, even though you're married and you're filing jointly on the same tax return, you and your spouse can both claim that credit individually on that tax return. So it's almost like you get a credit, you get a credit, you get a credit. So, that's the nice little part about it, is that you don't have to be married filing separate to get it. You can get it as married filing jointly, which would increase the amount that you would be able to get back. You could possibly get back like up to $30,000, because it's like if your spouse is getting up 15K and you're getting 15K, that's as a credit, you can really ramp up the credit at that time. Now, again, only applies if you are self-employed. So if you are an employee and you worked for an employer, this particular portion doesn't apply to you. Although there's another portion that employers might have paid you, like if you were working someplace and you got COVID, they might have given you some money back, for family medical leave for COVID. Now on your W-2, if you look in box 14, it'll say if you got that credit or not, that if you got that amount on your W-2. Now that doesn't apply. Now, if you are an employee and you run your own business, then you kind of have to look at that box 14 to see if your employer reimbursed you for some of that credit, because then you have to subtract that off of when you actually do your self-employment, because it's like double dipping. You can't get both. You can't take what the employer give you and get Uncle Sam to give you the same amount. So it'll have to get separated. So I just want to add that piece in to let you know that yes, you can get it both. If you're a married couple, you both each are entitled, because you both might have been affected, because you might have gotten COVID, your spouse might have also gotten COVID. And you, in turn, you had to take care of your spouse had to come back and take care of you. The kids might end up having it. You got to go take care of the kids. So it's many different scenarios that would help and allow you to be able to claim this credit.
Yeah, and they have their like just two little tests for yourself to say, okay, if you were employee with another employer, if they were eligible, if you are eligible for medical or family leave, then you are eligible for this credit. This is just for yourself to know, okay, I'm gonna be able to get that credit. Imagine yourself as an employee for someone else. If they were gonna give you that credit, then yes, you can claim it. And you just have to remember to tell that for your tax professional, because if you don't say it, they won't know it. Then you will lose that credit.
Absolutely. So yeah, so that's pretty much, we wanted to come on here to kind of, talk to you guys about that, and to also to make sure that we say that, many people like to do their own taxes themselves, because you feel like, okay, it's easy. You can get on the softwares, there's TurboTax, and this Credit Karma has it now. It's even what's called Adobe end up saying something about, I don't think Adobe, you can actually do your taxes, but you can, use the PDFs to take pictures of your W-2s and things like that. And then you can go file your own taxes. Even on the IRS, if, you can go on the IRS site and get a free taxes done. But however, we don't advise you to go and do your own taxes, because if you're doing your own taxes, you don't understand how to fill this form out. You may end up putting in incorrect information. You might put the wrong amount of days that you can take, because the maximum amount of days is 50 days. That is the maximum amount that you can put in to claim this credit. There's also a portion on there, I think it's in part 2 or part 3, I can't remember, that says if you have counted the days, the 10 days in the first part, you have to subtract those days from that second part. And if you don't know anything about that, you're going to calculate all those dates and it's going to be incorrect. And you may end up coming into some issues later. So we would definitely advise you not to do your own taxes this year, so that you can take advantage of this credit, especially if you were affected by COVID, because we all have been affected by COVID in one way or the other. And especially if it prevented you from doing your business for a day or more.
And there's also difference between, there's some conditions for what happens in the first quarter of the year, like from January 1st until April, and what happened later on the year. So you need to be able to distinguish and see which one applies to which part. So it's not really simple, it's kind of complicated. And as Shane said, like, using TurboTax, usually people lose a lot of money going there, because, and I have experienced it with my clients. Sometimes they do test you, right? Okay, we got this on TurboTax. What are you able to get us? And most of the time, it's more. Like I've saved a lot of clients 2,000 and more, just doing it with me. So same thing. I know Shane like had a similar story, like when you say
it just last week, I think it was, I posted about that someone came to me, they wanted to, they came up for a different reason. It was about some bookkeeping stuff, and they said they'd already done their taxes. And I was like, hey, we'll do a second look. So we take a look at it, and then I realized they did not have the COVID credit stuff on there, and they were eligible because they in fact did have COVID, and their children had COVID that they were taking care of, and they were out of school. So they had a significant amount of days that they were eligible to claim, but they didn't know that. Because when the form populates, when TurboTax comes up, it'll ask you a series of questions, and based on what you answer, that's the forms that they would give you. So if you put no because you didn't realize what something was asking, or if you say yes, something else it was asking and you're not quite sure, you're going to be completing it incorrectly. So they were left over 2,500 on the table because they didn't know about that part. So of course, we helped them do an amendment. So if you have done your taxes already and you happen to do it by yourself, or even if you went someplace else and did it, and you don't remember them asking you this question, did you have COVID? Did anyone in your family have COVID? If they didn't ask you that, then they probably didn't do it. And if you didn't fill that question out, then you probably didn't do it if you did it yourself. Then you can definitely reach out to one of us and we can actually help you to do an amendment to get the appropriate credits that you would entitled to get.
Another thing I just remembered, like even when you take the vaccine, a lot of people like got sick after that. That also counts as a
Yes.
COVID event. So you have to know all of these. Try to just take an inventory of what happened during the year and make sure you gather this information and put them in the file. Remember, IRS can go 3 years to audit you. So keep them at least for 3 years from the time you file.
Exactly. 3 years in a day if possible.
Mm.
3
Yeah,
years in a day, just in case. Hold on to it just a little bit
I know.
longer.
I have my tax return since like the first time I did my tax return. My kids the other day asked me, why do you have that? I'm like, I'm not required to have them, but just in case.
Yeah, I actually have tax returns from back as far I remember, like in 2003. I still hold on to them because you never know. Because when it comes to fraud, not saying that, you're all going to be, guilty of fraud, but if the IRS suspects fraud in any way, there's an unlimited amount of time where they can come back and audit. So generally it's 3 years. If they might have made a mistake or they might have think something was off, they have up to 3 years. But if they suspect that it's fraud, it's unlimited. It can be 50 years from now. You could be in your diaper someplace, sitting down in the corner, looking out the window, and the audit comes up at the end. You may not even know what's going on, but your kids and your grandkids or whatnot, they'll be dealing with that audit for you. So yes, when it comes to fraud, it's unlimited. So hold on to the documents as long as you possibly can. Definitely for at least 3 years, longer than that, if you possibly can.
Definitely. Definitely. And if you need any help, actually, we have our links. Just book appointment with one of us and we'll be happy to help you.
Absolutely. We posted the links on the in the live there, and I will post it again once the live ends. So we'll go back in and make sure we add the links in the comment as well. So you can reach out to either one of us to assist you with your tax and accounting matters, and definitely when it comes to the COVID credit. So just to wrap up, we were having a conversation about the COVID credit. And if you were affected by COVID, the credit can help you reduce your taxes, or it can actually give you a refund. So if you end up owing taxes, and you owe like $2,500 in taxes because you didn't pay your estimated taxes, a lot of you business owners don't do that. You didn't pay your estimated taxes and you owe $2,500. Well, you were sick with COVID, or you took care of someone with COVID, or your kid was home, or all of those scenarios that we just talked about, and it was end up being about 30 days. Well, those 30 days can possibly, add up to like $3,000 that you might be getting back as a credit. So that wipes that 2,500 out. Poof, goodbye. You don't have to worry about that. And you get an additional $500. So that's a little nice little feature, that nice little credit there that you can use to make sure you break even or give you back a refund. A lot of times as single entrepreneurs, you single member LLCs, or you single, you don't have any kids, you don't have any spouses, you by yourself. It's like uncle be trying to get going crazy on these taxes. You be owing the taxes, especially if you're not paying them people by paying on the quarterly taxes, you end up owing. So this is a kind of a way to kind of help you offset what you might owe, give you a little refund. And hopefully now you can take that refund and not go and spend it all in one place, but use it to pay your quarterly taxes moving forward. So you kind of, they're giving you a little bit and you give it right back. It didn't cost you anything because you didn't have to give up any money. You got some money to go ahead and pay your quarterly taxes.
Yeah, make sure you put it back in your business or pay your taxes.
Absolutely, absolutely. So we'll go ahead and wrap up here. You know, for anyone who's coming back through and you catching the replay, you know, you can put in the chat replay, and we'll have those links there available to you. You can reach out to Noura or myself. So again, I am Shane, the negotiator, and I help coaches and consultants to scale beyond 6 and 7 figures using legal, tax, and accounting strategies. And my link would be available to you if you need a 15-minute chat or for me to help you with any financial and tax and accounting services. And we're gonna go outro to Noura.
Hey, my name is Noura ALmasri, tax and accounting professional and the founder of Noura's Books. I help business owners to pay less in taxes and increase their cash flow utilizing tax strategies. Feel free to reach out, book your 15 minutes consultation. It's a free. Let's talk and let me help you.
Absolutely. So we are ending our live now, and we will be back again some point in time in the future before tax season is up with another live. So stay tuned.